Good morning and welcome back. My name is Kyla P. Barnes, your financial chef and coach, here to assist you in making your best financial dish. I wanted to take some time here on the second day of trading to cover what happened yesterday in the market, as well as some of my pro tips. I call them pro tips because they've worked for me for more than 15 years. So what happened yesterday? There were four sectors that were up: communications, financial, real estate, and utilities. In addition to those four sectors being up, the 10-year bond was up, the 30-year bond was up, gold made an impressive run, up 20 points. It's also up 18 points at this current time. Silver went up 16 points. And at this current time, it looks like it is up 9. So these are showing to be front runners for this particular trading session that we're in, which happens to be the second session of the year. How do you use this information? Well, you really just monitor it and you're looking for trends. Most of the time, the market is looking for guidance. Sometimes we get that from the Fed. Other times we get that from what happens international. We get that from events that occur globally. We also get that from what happens in our economy. So it's very important for you to stay abreast of news that's out there, look to see what happened in the market, as well as to ask yourself, what big news items have you heard recently? Which this leads me to some of my pro tips. First pro tip is I think you should have to ask yourself, what type of trader are you? Are you a fundamental trader? Are you a technical trader, which means you look at a lot of technical analysis? Are you a buy and hold trader, which is very passive? Are you a value and growth trader, which means you're looking for investments that are either beat up or that are oversold so that you can leg in a position? Or are you a cyclical trader, which means that you take everything at a macro as well as at a micro level, and then you determine what you'd like to trade? So that's my first pro tip. Ask yourself what type of trader you are. The second pro tip that I'll give you is to ask, what is your goal? I understand making money is a goal. Isn't that why we go to work? But ask yourself specifically, are you looking for a stream of income? Are you looking to develop a portfolio? Are you setting this up for retirement? Are you setting this up for growth? Or are you just looking for something that has a better savings rate than your local bank? Once you map out what your goal is, then ask yourself, how long are you going to do this? Are you going to go into this for a short duration, an interim duration, or the whole year? The last thing that I'll have you ask yourself is, how much will you be investing? Even though you have a lot, doesn't necessarily mean you should go put all that in a trade. One of the strategies that I use is that I set aside time to do research. Sometimes it's 1 to 2 hours on a stock, 2 times or 3 times a week. I then will think about the trade. I'll test it on paper, which means I'm paper trading, writing down the date, the time, the amount, how much volume it had, also writing down if there's any big news that came out that day. I then will evaluate. I'll look back to see what happened. I will test it again. So now this is a series of maybe 4 or 5 days. And then I will do one last reevaluation and then leg into the trade. When I say leg into the trade, I am referring to buying 5, 10, or 15 units or investments or shares. That's what I meant to say, shares, versus buying like a round lot of 100 or so, because sometimes the trade may turn and it may neither support technical analysis, fundamental analysis. It's really just the traders. It's supply and demand, as well as the robotic systems that trade equity. So keep in mind, before you go into a trade, think about it, test, evaluate, spend time, do research, test it again, reevaluate again, and then leg into that trade. The other thing that I like to ask myself is, how much will I be investing? And what am I expecting to gain and what am I expecting to lose? Know before you buy a trade how much you're going to invest, and then what is your acceptable loss. Sometimes it is just as important to map out how much you're going to lose versus how much you can gain, because the 2022 year, or any time an investment does a whipsaw and we cannot determine what's happening, the trade may move against you. So always have your buy-in price and your exit price ready. My name is Kyla P. Barnes, your financial chef and coach. These are just a few tips as well as a review of the first day of trading. Hopefully they will help to have your best financial year. Subscribe and like my channel on YouTube. I'm under Kyla_art or online, www.onegingles.com.